Hi, good morning. Thank you all for joining the Pantera Summit. I wanted to give those of you who are new to Pantera a bit of context. We have some of our LPs that have been with us for 8 years here, but many of you are new. And a bit of share some of the excitement I have about the space we're investing in. It's a very dynamic space. I think it's the biggest opportunity since the other half of the internet. This is the financial half. I think we're probably going to make a lot of money over the years, but the main thing that's exciting is it's going to change billions of people's lives. Anyone with a smartphone will now have financial inclusion, and it's going to take decades, and there's going to be some ups, there's going to be some downs. But that's why I'm really excited about what we're doing, everyone in this community. And the spirit of these summits is to get people together, share ideas, and just try and push forward the blockchain community as a whole. And the genesis of this is Pantera previously managed $1 billion in normal hedge funds. And in 2006, we started to have summits to get smart people together to see, how we could share ideas on disruptions. People like Peter Thiel, Christopher Hitchens, talking about markets. And as an aside, Christopher Hitchens, even after 4 or 5 scotches, was more lucid than I am sober. And in 2013, we decided to branch out and bring in all the smart people we could think of in the blockchain space. Blockchain space was small enough we could fit them all in my house in Lake Tahoe. So we brought in regulators, CEOs, the head of Bitcoin science, everyone we could think of to get in a room. What we really wanted to do is not just have those of us that are already drinking the Kool-Aid, the people who were excited about blockchain. We brought in federal prosecutor Katie Haun, CFTC commissioner, and I really applaud those types of regulators for wanting to be part of such a, kind of an eclectic mix of people. And the spirit was to bring people together for a few days, debate some ideas, and hopefully just move this whole project forward. And that's, again, what we're trying to do now. The summits have grown dramatically since the early days. Bitcoin was at $123 per Bitcoin. The whole market was about $2 billion. Obviously now it's over $1 trillion, and we're talking about, much bigger markets. Wanted to give another little bit of sense of kind of the spirit of this community and why I'm so excited about it. The first time I went to a Bitcoin conference, it was in some threadbare hotel in near Madison Square Garden in New York, and there was only a few hundred people there. Once we got the idea to bring all the Bitcoin community together, I decided that we wanted to get more presence, we wanted to get more understanding, and there was a brand new conference called Money 2020, which is now huge, that was just starting to happen, and it was happening in Las Vegas. So I booked our first summit to be the 3 days before that, and then everyone went en masse, to Money 2020 to try and help, broaden exposure for blockchain. The really sweet bit about this is I decided, since everyone's going the same 3 different places, and it's a big triangle, it's really hard to get around, probably be efficient to rent a couple turboprops and have people all travel together. And most of the people said it was great. Everybody, was excited about that. But Jesse Powell, who subsequently founded Kraken, he was so worried that a plane crash might jeopardize this Bitcoin project that was so important. He organized carpools, and a bunch of people sat in Bay Area traffic for 6 hours to get up there. And that really is a testament of why I'm so excited about this space and why it's more than just IRRs and returns. So it's a global thing. The thing I love about this is we have investors from 52 different countries. The main countries are on the screen there. We have as many investors. If New York were its own country, it'd be number 2 on our list. And one of the things that I wanted to mention is, next slide, please. The background and history of Pantera itself is we launched the first crypto fund in the United States in 2013. It's our Bitcoin fund. It's still a fairly efficient way for individuals and institutions to get exposure to the space. We also launched the first blockchain-oriented venture fund in 2013. And my partner, Joey Krug, launched the first ICO on Ethereum Augur in 2015. And then in 2017, we launched the first fund that invests exclusively in early stage tokens, which is one of our largest funds today. My three partners have been fantastic. Joey Krug joined us about 4 years ago, and Paul Vratotakis about 7. We've had a wonderful team of about 30 people supporting our investment activities in the space, and all the work it takes to keep 6 different funds going. The thing I love about the partnership with Joey and Paul is if you did a Venn diagram of our skills and experiences, essentially doesn't overlap at all. The things that they are good at, I don't know much about, and the things I've done for 35 years are different from theirs. The firm itself now is $4.3 billion. We manage 4 main fund strategies. We've made 70 different venture investments in companies in the space and 54 in early stage protocol tokens. We like to lead the deals that we're in, have conviction and passion about the projects. So we've led half of the deals that we've invested in, but we're quite open to partnering with other firms in the space that can bring other things into the mix. And so we've had about half of the deals are ones that we join in what other people are doing. And then on the portfolio side, we have seen a very interesting shift since the early days. In the early days, most of the projects were in the United States. 2/3 were headquartered in the United States, often by entrepreneurs from around the world, but they located in the United States. We've seen that shift very dramatically, actually, since our last summit in 2019. Since then, we've done 56% of our token projects are based outside the United States, and 47% of all deals are based outside the United States. I think it's a very interesting issue from a US perspective. We want to maintain a regulatory, I would say lead would be great, but at least not be a hindrance. And so later today, we'll be talking to SEC Commissioner Hester Peirce about how the US can remain competitive. The next slide is some thoughts on just kind of how the market's changed. The market's changed dramatically since our first blockchain summit. We, at the time, had 5 limited partners. We invested just a few $1 million in the markets. We had 2 positions. We had 1 token and 1 equity. We ultimately bought about 2% of the world's Bitcoins. And we bought 3% of Ripple Labs. We had just 1 asset in each of our 2 funds. Since then, we've branched out. We have 4 main products, but 8 different versions of them as we're on to our 3rd venture fund. A hugely important achievement for us is we've generated $8 billion in value for our general partner and limited partners over the years. And we now have 30 people helping us do that. Part of why we launched our strategy as we did in 2013 is essentially evangelizing a whole new asset class. I think, I've lived through in the early 80s when I was at Goldman Sachs. Goldman created the Goldman Sachs Commodity Index and turned commodities into an asset class. In the 90s, emerging markets became an asset class. I think over the next 10 years, blockchain will go from kind of a curiosity 5 years ago to 5 years from now. Almost every institutional investor will have a blockchain team, they'll have a blockchain allocation. And in order to do that, we're trying to do events like this to help spread knowledge about the opportunity. And one of the ways we do that is with our investor letter. It recently went over 1 million reads, which is pretty wild for a financial investor letter. The Bitcoin price changed obviously dramatically. One of the ways I tried to convince the participants in our first summit is to try and put some perspective on the value of Bitcoin relative to a public company. And I selected Urban Outfitters. Urban Outfitters is a cool retailer, and it had exactly the same market cap as Bitcoin at the time. And the line I used was that although Urban Outfitters is really cool, in the end, when they dig up our society all Planet of the Apes style, I think Bitcoin is going to have had a bigger impact on our world than Urban Outfitters. That's playing out. Bitcoin is now above the value of Facebook, and we'll talk about that in a little bit. So one of the other important themes for our institutional investor audience today is back then there were really only 3 tokens you could actually buy. Today there's 150, and that is a really important part of an investing strategy, is building a diversified portfolio, not just of tokens themselves, but in equities. The value of Bitcoin relative to public companies is a fun way to gauge how the industry is growing. And here I use Bitcoin essentially as a proxy for the industry as a whole. Obviously, there's a lot of tokens that are investable and interesting to invest in. In 2013, Bitcoin was worth about the same as Urban Outfitters. In our last summit, Bitcoin was worth as much as Home Depot, and DIY big box retailing is a really cool concept as well, but it's probably not going to have as big impact as Bitcoin. Photo sharing, very cool. There's lots to be said about Facebook, but Bitcoin's probably going to end up way bigger than that. And the question of how big it can be and where it's going is something pundits are always talking about. I have spent a career doing pattern recognition, trying to see things that are repeating and forecast what it will be in the future. And the easiest visualization of that is this: Bitcoin grows in order of magnitude every 2 years. And it's just a wild correlation that sticks and sticks. I'll note there's one exception. There's one time, the February 16th and May 2017, it did not work. But in every other case, every 2 years, the number of people using Bitcoin has gone up 10x in 2 years, and the price of Bitcoin has gone up 10x in 2 years. And that's really a theme that we're going to talk about later today, is how do you value Bitcoin? Some people stress about it because there's no cash flows to discount. It's really just supply and demand, going back to the Econ 101 price charts and looking at the impact. And the more people that use something, the more valuable it will be. And we will talk about our recent price forecast later, but if you do see Bitcoin extending this trend, it will get to 200,000 next year. Where's it ultimately going? There's a kind of a race in the pundit community to come up with the most outlandish forecasts. It's going to $1 million of Bitcoin. It's going to $5 million of Bitcoin. Those are hard to see, but in extrapolating this relationship here, there are 3.5 billion people on Earth with a smartphone. That is the only requirement to enter the world's financial community via blockchain. So if we kept doing that, Bitcoin would ultimately be $700,000 per Bitcoin. And I admit that sounds insane. If you said something like that in a normal asset class, people would think you were crazy. In this, I think it's highly likely. And I think it's going to happen, in years, not decades or millennia. Okay, so on the financial case, here is one argument for why this asset deserves a place in a portfolio. There's 200 paper currencies on Earth. So if you take every paper currency and then you only include the biggest cryptocurrencies, so not the little small caps or micro caps that are rallying dramatically, but if you only include the biggest currencies out there, Bitcoin has had or crypto is generally has had a better run in all but 2 years. And we think that will persist. So investors should have exposure to the space. Big question is how to get exposure. Obviously, just starting with Bitcoin is the easiest way to do it. It will give you exposure to the largest asset in the space. Bitcoin is 56% of the total market cap of the industry. So there are many products out there for getting exposure to the space. We have our Bitcoin fund, which I think is cheaper or more competitive than any of the other products out there. We also have a hedge fund that trades both long and short liquid tokens. That fund, we are telling investors, is mainly going to be long for the next few years, because we think that the markets are going to rally massively over the next 3 or 4 years. But then in 3 or 4 years' time, when we do get to numbers in the hundreds of thousands per Bitcoin, it will become more of a long-short fund itself. And that fund invests in any liquid token. There's about 150 of them liquid enough today for people to invest in. And then the early stage token fund is investing in these protocol tokens prior to them becoming liquid enough or becoming liquid and going public. One way to think about it is the early stage token fund is like a private equity fund for protocol tokens, and the liquid token fund is a public equity fund, trading things after they become public. In the early stage token fund, we're trying to source deals well before they are known to the public. And in our industry, there's already 5,000 different tokens out there. So that's a head spinning array of potential projects for investors to shift through. We have a large investment team that's doing that, trying to filter out those tokens. Obviously, for the protocol developers, they're looking for a firm such as Pantera, or one of our competitors, to help underwrite the token so that other investors know that at least some due diligence has been done and that it's a solid project. In the earliest days, projects would go live very quickly, but then in 2018, the SEC began trying to determine which of these projects are securities and which ones are not securities, and that essentially made the markets default to acting as if all things are securities. And so the liquidity slowed down greatly in that space, and it typically takes, it's definitely a minimum of 1 year before things go live, and it often is 2 or 3 years. And so that fund is set up somewhere kind of in between a very liquid fund. It has quarterly liquidity with 1 year notice period, and that ensures us that we have 1 year to make sure that we can liquefy the portfolio. And all of our funds have monthly inflows. The argument of just Bitcoin is essentially this: there is so much alpha in the space that while I wholeheartedly support institutions getting some exposure, and Bitcoin is obviously a great place to start, the industry is so much more than just Bitcoin. Over the 15 months since the end of 2019, Bitcoin is up 700%, which obviously is just an incredible return for any asset class. But the other tokens in the space have outperformed, and then our selection of those tokens and our risk mitigations have added quite a bit of alpha. So investors should get exposure however you can to the space. But in thinking about it, definitely a mix of tokens and active management is likely to return better returns over time. We also are finishing investing our third venture fund. Our first one was invested in things that are mainly buying Bitcoin or storing Bitcoin, so exchanges, custodians. The second one is all about cross-border use cases in really a financial sense. And then now we are investing a fund that is about using digital assets in much more interesting use cases and really building out the remaining bit of infrastructure. Over the balance of today, we're going to go into some case studies on the types of investments we've made, what we're investing in Venture Fund 3, and it really is such a diverse mix of types of companies. The first fund was very kind of monochromatic. It was exchanges and custodians. So it's very exciting. We are launching 2 new funds to add to our fund family. The first one is our blockchain fund. It is a way for institutions to get exposure to the entire blockchain ecosystem in one fund. The reason we're doing that is our fund structure is essentially kind of a function of our history of first, essentially, as you know, the first fund, so it had one asset in it, Bitcoin, and then we did a venture fund that just had venture assets, and then we were the first to launch a exclusively early stage token fund, so that's all it has in that. So we've built out a suite of 4 funds that cover the entire spectrum of assets, but that does leave the allocator the choice of which fund should you invest in. And that's a topic that we'll devote a whole session to, is how to get exposure to the space. But it's been an unsatisfying answer to some institutions. They'd rather essentially make an allocation to blockchain as an asset class and then have the manager allocate amongst the various assets. So we're launching Pantera Blockchain Fund. It'll probably have its first closing in the 3rd quarter this year. It is an institutional fund, so the minimum will be $5 million. That is a departure from our history. We've tried to make all of our funds as accessible as possible. Most of our funds, we have the minimums literally as low as we could go on a statutory basis with like the Cayman Islands Regulatory Authority or whomever is the regulatory body. So most of our funds, we have a $100,000 minimum. In this case, we are targeting institutions, so it will be a $5 million minimum. It'll have 3 main buckets of risk. Obviously, it will continue to invest in venture, investing in private companies that are using blockchain to do something better, faster, and cheaper than we currently can do with old school technologies. We'll be investing in early stage tokens. So again, the investment process is very similar to early stage venture, meeting protocol developers when they have just kind of the genesis of an idea, investing in the project, and then trying to help them grow over the 3 or 4 years it takes to become public and to get out into the markets. We'll also be investing in liquid tokens in the fund, so tokens like Bitcoin or Ethereum. One of the reasons to do that is to get exposure to the overall space. Protocol tokens are obviously a huge part of the value in this revolution that we're having here. And then also it will allow us to get exposure to the space and balance that against opportunities in venture. One of the challenges for institutions is getting their capital put to work. And in a typical venture fund, it takes 3 or 4 years in the investment period to get fully invested. Here, what we'll do is we'll have regular quarterly drawdowns. 25% of the capital will be drawn down at the beginning, and then regular quarterly with drawdowns over the first 2 years, so that the fund will be engaged and invested in the market. Early on, it will probably be a bit more in liquid tokens. And then as we source deals in the early stage token market or in the venture market, we will be shifting that balance. Ultimately, the majority of this fund will be in what would be called illiquid tokens or in venture. So it is set up like a venture fund. It'll have a 10-year term to it. And all of our funds have co-investment rights. So for investors, you know, we get it that most of our investors, you know, they obviously want a good IRR, but they're looking to learn about the space. They're looking to see how it's going to disrupt their own businesses, see what impact it's going to have. So in all of our venture funds, we've offered a co-investment class. It's been wildly popular. We've almost every time we have sold out our co-investment class. This will as well offer the same co-investment. 10% of every deal at a minimum is offered to our co-investors. We're typically able to offer more than that as we lead half of our deals. We have a lot of sway with how the book is created and are able to provide, you know, more co-investment for people. The question is, you know, how's this fund different? What's it doing differently? The answer is nothing. We're doing exactly the same thing when we come into work every day. We're looking at entire spectrum of blockchain assets that are interesting and exciting. It's just a different wrapper. And we are essentially providing an easy access for the LPs that want the full spectrum. As I mentioned, we built our 4 fund families up by creating each of these new types of funds, but then it leaves 4 different things people have to choose from. I'm happy to say that 28% of our LPs are in multiple funds of Pantera, and there are even some that have gotten ahead of us and created their own version of the blockchain fund. They're invested in all 4 funds, but this does give an institution the wrapper so that they can be invested in all of the assets across the board. So a couple obvious questions is, in our old regime, any new asset that we invested in could only have 1 home. So if we invested in equity, it had to go in the venture fund. If we invested in an early stage token, it had to go in that fund. And if something was already public and trading, it had to go in the liquid token fund. Now we will have 1 fund that can accept all of those. Going forward, once we've completed investing venture fund 3, all new venture deals will go into the blockchain fund. All of the top line funds are single funds, with the exception of venture, will be still open for investment. So investors that really do want to pick one of the 3 subcategories can still invest. And new deals on the early stage side will be split pro rata between the 2 funds. And the liquid token fund strategy, in our liquid token fund, we are fairly actively trading it, and we even have 25% of the fund in a hourly trading quantitative strategy that won't be replicated in the new blockchain fund. But we will have more macro style positions in the major currencies, Bitcoin, ETH, in the blockchain fund itself. Obviously, if you have any questions on our funds, you can send emails to ir@panteracapital.com, and our investor relations staff would be more than happy to answer your questions. Today, we're fortunate, or over the next 2 days as well, we're fortunate to have 35 of our portfolio companies join us. We have companies we've been invested with for 8 years, like Jeremy Allaire at Circle will be here, Brave, BitGo, and then we have new projects like Amber and Polkadot that we've invested in over the more recent years. We are trying to do this to make it share as much information on the space as we can. We do have a way to ask a question online. I want to encourage you all to ask as many questions as you can think of now or at any point over the next 3 days. The entire investment team is monitoring the questions field. What we'll try and do is any question that's pretty specific, we'll just answer straight away. But if something's kind of generally interesting or applicable to one of our 3 panels or one of our panels over the next 3 days, we'll save it to have the CEOs ask it. But we really do want to make sure that we're conveying whatever it is you are all interested in. So to the extent you have a specific question for any one of these founders, please go ahead and ask, and we'll either ask it live in our panel sessions or get in touch with the CEO directly and try and get an answer back to you. It's all about information exchange. So the agenda for today, I'll be joined back on stage after a short break to talk about our investment thesis, have Joey Krug and Paul Verata-Tackett share their views on the markets. We're going to have some important institutional investors talking about how blockchain fits in their portfolio. Still very early days, but some institutions are engaging it in a meaningful way. I'll have a discussion with SEC Commissioner Hester Peirce. She's been called in our industry crypto mom because she's been so supportive of crypto. She's really been a fantastic advocate of, I would say, just rational dialogue. An example would be the SEC has yet to authorize ETFs or any kind of exchange traded product in the blockchain space. She argues, and I think she's very eloquent in an argument, that the SEC is holding blockchain to a much higher standard than they hold other asset classes. And the line I would use is if you compare it to GameStop, which even before the mania was trading $70 million a day, and it was trading it all on one exchange in one country. And then you have online so-called free trading apps that could start or stop people's ability to trade those securities. That is very easy to manipulate, and as we've seen, it got manipulated both way up and then way down. One of the two stated reasons for the SEC not allowing an ETF in our space is market manipulation. And I've been in the markets for 35 years, and I've seen some strange things that have raised an eyebrow here or there. Bitcoin is so much bigger than any market, it's impossible to manipulate. An example would be Bitcoin now trades $70 billion a day, so 1,000 times more than GameStop, and it trades it on 100 exchanges in dozens of different countries. So we will talk to Commissioner Pierce about that. We'll also have 3 of the operational and trading partners of Pantera talk about the infrastructure needed for custody and trading of assets, and then a very interesting discussion on the regulatory outlook from a bank perspective. And then Joey, Paul, and I talking about whether one should invest in equity or tokens. And then I'll try and wrap up with a bit of what we have. The last slide is one of the most important. It's about poker. At the end of each of these summits, we've traditionally had a poker tournament. It's a great way to get to know other people in the space and play. Originally, I think somebody forgot how expensive Bitcoin were and sent out kind of the wrong number of Bitcoin as a buy-in. It's a very small fraction of Bitcoin, which is worth about $100 to 1,000th of a Bitcoin. And all the buy-in is in Bitcoin. If you need any help buying Bitcoin, we're more than happy to help people learn how to get exposure to it. And I want to stress, we're trying to replicate the fun aspect of sitting around a table with other people in the community. Our poker provider is one we've used before and has an incredible online version of it. Also, everyone is on Zoom, so there's video and audio, so you really will get to know people in this process. The important bit is it starts out very low stakes, so it is quite a social game, and then over time the antes do start ratcheting up, and it starts to become a little bit more a game of skill. One of our portfolio company founders, Ed Makonda, is actually the winner of the World Series of Poker. He will probably be at the table longer than I will, but it'll be fun to be there for a while. So each of the tables will have a Pantera or several Pantera people at each of the tables. So it's a great way to get to ask questions of Joey, Paul, or the rest of the investment team. If you have a friend that is attending the summit and you want to play poker with them, send an email to one of my colleagues, Mary, whose email address is simply mary@panteracapital.com. We'll make every attempt to set up the tables so that people are in the tables they want to be in. With that, I want to thank you all for joining and participating. Again, it really is for you. So whatever you think you want to have more of, or any suggestions of how to make the next 3 days more impactful for you, please do shoot those to us, and we're happy to accommodate. So I'll see you in about 10 minutes for the first thesis session.